Good morning, everyone. We're ready to get started. Thank you for joining today's webinar. My name is Harris Gostian. I am a director at SC&H Group in our business performance management practice. I'll be your moderator and also your co-presenter for today. Just a couple housekeeping items before we get started on our webinar related to account recs. First of all attendees will be muted during the call. We will send out the webinar with a link within the 1 business day, so you should expect it at some point tomorrow. And then on the panel on the side, your go-to panel, please submit any questions on the questions tab, and I'll be collecting them throughout the presentation and we'll answer them at the end. Thank you very much. Okay. All right, as I said, I'm Harris Gostian, a director in SC&H's business performance management practice. And I lead our EPM consulting practice that's really focused on helping our clients transform and modernize their close consolidation, budgeting, and forecasting processes, as well as adopting underlying Oracle EPM cloud technology so they can better utilize financial management and operational information to make data-driven decisions. I'm joined today by Michael Arabian and Samantha Malinov. They are both experts in implementing the Oracle EPM cloud components, and they're primarily focused on helping clients with close consolidation, account reconciliations, and US GAAP and external reporting. Through best practice process redesign, along with the technology we're going to review today in the Oracle Cloud EPM, they've helped companies dramatically improve their close cycles, shave days off these cycles, and really take manual activities performed such as data input, creating reports, or even these manual account recs, which we'll review today, and really automate them to drive efficiencies in process. Just a little bit about SC&H and our business performance management group. SC&H Group was formed in 1991, and we've been serving clients for 29 years. We have over 250 consultants specializing in everything from management consulting and the Hyperion implementations that we'll talk about today, as well as accounting, tax, and audit services, really giving our clients an end-to-end finance and accounting solution, whether it's helping them file tax returns or helping them close the books. We can cover the gamut of services. And then across our service lines, SC&H's powerful minds, passionate teams, and proven results are really our key differentiator on why our clients trust us to help solve their most critical business challenges. Just a little bit about our business performance management group, or BPM as we call it for short. We have over 50 employees. Each is trained and certified in the Oracle Cloud EPM technologies, and the majority of them on the Hyperion legacy on-prem solutions as well. Just a couple noteworthy items. We are responsible for performing the first ever Oracle Cloud ERP and financial close cloud implementation for Thayer. We have on our resume deploying Hyperion planning in the cloud, or PBCS, to over 3,000 users at Hilton as Oracle's largest deployment. And we are looked at as Oracle's go-to partner, whether it's helping test new functionality or serving on implementations to really perform Oracle Cloud EPM implementations for clients of all sizes. Just in typical fashion, here's our NASCAR slide of common clients and clients that we serve. And whether, like I said before, whether it's the Oracle EPM cloud components around planning and close consolidation, or even the modules like around account recs that we're going to talk today, as well as the Hyperion on-prem components, I hope you'll get a good idea today of our expertise, not only in the technology solutions, but in the business processes that we use to support our clients. All right, so now that the intros and housekeeping are done, what are we going to talk about today? Really 4 things. Why use Oracle's account AR? We're going to have Michael perform a demo of account reconciliations, and then we're going to talk about client successes and lessons learned and what's next. All right, so why use Oracle's account rec? Probably the number 1 question to ask before this is, what are CFOs asking for today? And I work with a lot of executives, CFOs, finance VPs around, controllers around what's really driving the business today. And with all the COVID stuff aside and that, really, what CFOs are asking for today is they want to automate the basics. They do not want their employees any longer doing high-touch manual processes that slow them down. And whether it's supplemental data entry, report creation or distribution, or reconciliation and validation, like we're going to talk about today. These are the basics. And before companies are able to implement more advanced RPA technologies, these basics have to be solved. And then really the second thing that CFOs are asking for is improved data quality to help support the decision-making process. And this really means connecting business processes, providing users with guided workflows, and then the compliance and controls that help improve efficiency in processes and accuracy in reporting, which ultimately lead to visibility into results. And as I turn it over to Sam, the account reconciliation process, as well as the technology solution that we're going to review from Oracle today, really helped meet these items that CFOs are asking for and are critical to their business going forward. So with that, I'll turn it over to Sam to talk about kind of more of the background between an account rec before we get into the demo.
All right, thank you, Harris. So I'm going to talk a little bit about what a rec is, and I think we might have skipped a slide if you want to go one back. Okay, perfect. So the first thing I wanted to cover was what are a couple of the steps of the close process. I'm sure some of you are probably familiar with this, but some of the general steps are you would post your subledgers, you would then close your general ledger, and then from there you would get into your consolidations, and then you would do your reconciliations on that data. You would also do your reporting on that same data, whether it's internal, external, legal reporting, that kind of stuff. And then you would follow that up with your compliance. And so what we're really going to be talking about today is the reconciliations portion. And so when I say reconciliations, what exactly is a reconciliation? So there's a couple of different types, but it usually consists of a validation of the balance in the account, whether it's a validation against what should make up that balance versus against another system. So some of the big examples we might be familiar with are the cash reconciliations, where you would reconcile your bank transactions and your bank balance back to your GL and kind of see what's missing in either of those systems and try to figure out why they don't have the same balance, or if they do, then you're good to go. The other type would be more of an account analysis, where, for example, in your prepaids, you may have a balance of, for example, $100,000, and you don't really have anything to compare back to, but you need to know why that balance is what it is. So you would have those items that would explain that balance. There are, of course, other types of reconciliations where you would do just simple balance recs from your GL to your consolidation systems. Maybe you may do variance analysis. There's a couple of different kinds, but those are some of the main ones. And generally, those are done for balance sheet accounts. So moving on to the next slide, what are some of the pain points with the current process that companies go through? So a lot of the complaints are that they currently have a manual process. So they're in Excel, they're doing a lot of rework, they're managing Excel workbooks, there's no one source of the truth, they're kind of passing those back and forth and trying to keep track of the different hands that touch it, as well as the different formulas that are used, and it can get really complex there. Kind of in the same vein, incomplete information. So you have a version control issue. If you're working on a reconciliation and you have someone else that you work with, you have to make sure you're keeping those versions in alignment, or else you run the risk of having incomplete information as you're running or as you're completing your reconciliation. And then you have audit issues. So I'm sure everyone might be a little bit familiar with, having an Excel workbook and having to walk an auditor through their process and explain those numbers and why they are the way they are. And you have to have so much backup to explain your manual process to be able to prove that you've done it correctly. Then, of course, in the same vein, you have security questions. So anybody can send out a workbook, anybody can insert Excel formulas. How do you truly know that your workbook is correct and protected? And then limited visibility. So if you're passing Excel workbooks back and forth, or you're even completing your reconciliations on paper or maybe in another system, not everybody's going to have visibility into, first of all, those numbers, but also where you are in that process. So that kind of goes into the lack of governance, where you're not really sure who's doing what, where they are in the process, and you're kind of just, you've closed your books and you're kind of just hoping you get to that final reconciliation. So what are some of the solutions that companies are using today? Like I've mentioned, the first one would be Excel. Everyone knows and loves Excel. It is a great tool. But when you're doing reconciliations and you have to have so much support and so much backup, you can start having Excel workbooks with 30, 40, 50 tabs, and it can start to be a little much. So while it is a really great tool, you do have those issues where it's not connected to a system. It's, you have to pass those versions back and forth. It just becomes a little more troublesome when you're working on reconciliations. And then of course there's Blackline. I'm sure many of you are familiar with Blackline. Great tool. It does do the account reconciliation functions. So it will do, you can load balances, you can do your reconciliations, you can do transaction matching. But there's two problems with Blackline, and I don't really want to say problems, but some of the pain points we've seen are, one, that it's not connected into what would be your suite of products. So it's just your account reconciliation standalone. You're not connecting it to any other suite, which I'll explain more what that means once I get to Oracle. And then the second issue is usually that it's pretty expensive. So I do believe their pricing model is structured on the number of transactions you're using transaction matching for. So if you're a large company with a large volume of transactions, that can get to be pretty pricey. So finally, we have Oracle. And so of course, we're going to be talking about Oracle today. So the two great things about Oracle account reconciliations, formerly known as ARCs. So if I do call it ARCs, I apologize. It's now known as account reconciliation. But one of the major benefits is that it's connected into the whole EPM suite. So not only are you able to do your account reconciliations, you're also able to do your close and consolidations, your profitability and cost management, your tax reporting, your narrative reporting, your planning and budgeting. All of those things are within the same suite. So it's as simple as pulling and pushing data between these systems, as opposed to loading in flat files, exporting it, dumping it into another system, and kind of having that disjointed process. And then the other benefit is that with that suite is the pricing structure, where you can get multiple products with one pricing structure. So you're going to be able to get your close consolidations, your account recs, all of those things all with one price. And so on this slide, that kind of explains a little bit more about what I was talking about. So you can see on the chart on the left, you can align your enterprise data, connect your planning, close with confidence, reinvent analytics and reporting, and outperform with intelligence. So that kind of covers all the pieces that your company might touch. And then in the middle, you can see the different departments: IT, finance, marketing, so on and so forth. So the graphic on the right really shows what is part of the financial close, which is more so what we'll be focusing on today. So you've got a couple of different pieces. You've got your general ledger, you've got your financial close and consolidation, which would be what was known as FCCS. You've got your account recs, you've got your tax reporting, which was TRCS, and you've got your narrative reporting, which used to be EPRCS. So those are your pieces of the financial close, and we're really going to be honing in on account reconciliations today. So going back to Oracle's AR, why should you use it? So a couple of the main points are auditability, automation, the fact that it's centralized, there is reporting, visibility, and workflow. So kind of diving into each of those separate items. Auditability and reporting is important. And so with ARCS or AR, you can streamline the process and really perform more analysis. So we've got some screenshots on the right. You can see there's dashboards available, there's analytics available, and really the hope is that you would spend less time physically compiling those Excel workbooks, and you would spend more time analyzing them. You would find your bottlenecks, you would find your high-risk accounts and the reconciliations that you're performing for those accounts. So instead of spending so much time in the weeds, you're able to take more of a high-level view and really start to analyze your process. In addition, the auditability, ARCS does, or AR does come with pre-built reports, but not just regular reports. There are audit-specific reports that you can run at the push of a button, and it provides everything an auditor should need when auditing a reconciliation process. And we've also got workflow and visibility, and I think this is probably one of the highlights a lot of clients love about AR, is that it does have the workflow. So no longer are you emailing back and forth, asking people when they're going to be done, what's their progress, are they having any issues, that kind of stuff. You can log into AR and you're able to see the balance of the account, any comments preparers or reviewers may be passing back and forth, any attachments they may have. You can see the reconciling item and the transactions they're matching as it's happening. So you can log in at any moment and see exactly where someone is in the reconciliation process. And you can monitor that through reports, dashboards, any other thing that I mentioned on the previous slide. And it really helps you convert that manual process where you're working in spreadsheets into one system that is very user-friendly, and you can see everything that's happening. So you really have that visibility, and it allows people to be assigned as, for example, a preparer or reviewer, to be able to pass the responsibility back and forth so much more seamlessly than if you were to do it through email and workbooks. And then, like I said, you can monitor the real-time status of the reconciliation process, which really helps you identify bottlenecks. Maybe one person has too many reconciliations, maybe one reconciliation should be split. It really gives you the ability to start analyzing how you are completing your reconciliations and should your process change, as opposed to spending so much time just trying to get yourself through the process. And so on the next slide, we have, it is centralized and there's automation. So this is kind of the icing on the cake here. You have your system that allows you to do all of your reconciliations as you normally would in a little bit of an easier way. But you also have this centralized repository where you can store all of your support documents. You have all of the reporting you might need. All of your balances are there. There's no more, I need to email this person and get that balance. I need to email that person and get for support documents, or you're not really sure where things are coming from. You have direct data integrations with this system, so you know where the balances are coming from. People are uploading their support documents. It's all right there at your fingertips. And then kind of the sexiest part of account reconciliations with Oracle is the transaction matching, which I know Michael will cover more in his demo, but it has so much power behind it that you can load hundreds of thousands, even millions of transactions, and the system can process those and match them based on your rules almost at the snap of a finger. So you really do have this ability to take what used to take days upon days and so much manual work to seconds, minutes. It depends on how many transactions you're loading, but it does really take the burden off of the one person who was manually doing those matches to be able to do those in the system and spend more time tracking down the differences, as opposed to just trying to figure out if there are differences or not. And so that's really, what is an account reconciliation? Where does it fall in my close process? What tools are available to me, and why Oracle's account reconciliation really is one of the best. And Michael's going to go ahead and cover a demo of the actual product, so we can show you what it looks like today, and then we'll go ahead and talk about some more items after that. So Michael, I'm going to pass it off to you.
Perfect, thank you, Sam. So Oracle's account reconciliation tool, the demo that we're going to show today is primarily going to be focused on more so a highlight reel of some of the items that Sam mentioned of the benefits with Oracle's account rec tool. In addition, I did also want to show some of the points and clicks that everyday users would go through to accomplish things such as completing their recs, looking at dashboards, using reports, as well as doing what Sam called the sexy part of ARCS, which is the transaction matching. So with that being said, this is the home screen for the Oracle account reconciliation tool. You'll see several panels here, and where we're going to start today is primarily going to be with the work list. So moving into the work list, you'll see several different aspects here. This is going to be primarily your list of recs available, as well as the due dates that are associated with those recs and the status. Across the top, you'll see the ability to filter by period, by due date. So if I select this, you'll have the ability to select recs that are late, due within 7 days, or even due today. There's the ability to filter by risk rating. So if you know there are some account recs that are high risk and you need to get to those first, well, you can filter by that list and focus your efforts on those high risk account recs. You'll also have the ability to go into account types. And for right now, we have accounts receivable, accounts payable, fixed assets, as well as several others. The other filters can all be used as well. So from here, the first rec that I want to show is the prepaids. So if I scroll down my list, it's a fairly simple list. You also have the ability to search if you had a longer list to work with. And I'm going to select this prepaid other. This is going to bring up the actual account rec profile. So for this here, you'll be able to see the balance is going to be loaded into the system. And then you'll have your balance explanations, as Sam mentioned, since this is an account analysis rec. And to summarize what Sam said earlier, or to repeat what she said, essentially the account reconciliations with the account analysis format are going to be balances that you're not necessarily comparing back to a sub-ledger or any other system. It's going to be something that you need to build up the balance and show what's getting you to that ending balance coming from the GL. Couple of items here, you'll see the dashboard down at the bottom, as well as the status for the rec, the end date, how many days until it's actually due. You'll see the attachments that Sam mentioned. All users that have security access to this rec have the ability to post attachments to support how the rec is being completed. In addition, there's the comment field that can be posted and viewed by all users that have access to the rec. On the side panel here are going to be several different options. One of the key ones that Sam mentioned as she was going through the benefits of account reconciliations was the workflow. Now, the workflow is going to show you exactly who the preparer is and who the reviewer is for the rec that you're on. You can have several preparers or several reviewers for the rec. This one example here has the demo preparer completing the rec and the demo reviewer reviewing and passing the rec through. Other items include warnings that would appear. Thankfully, this reconciliation has no warnings to report, which is a good sign. You'll also be able to find items such as the attachments all posted into one section, as well as the comments that would be created and applied. But also, most importantly, it goes back to that audit factor and just tracing what's occurring within the application. So if I click on this last one here, you'll be able to see the history of the rec. You'll be able to guide every step of the way to see what the preparer and the reviewer has done for the specified rec, and it's all going to be tracked within the system and by reconciliation. So with that being said, I'm actually going to close out of this and move over to the balance explanation section. There we go. So from here, you'll see that we've populated this application with a couple balance explanations to lead up to explaining that ending balance that was loaded from the GL. In this case, I'll click on the ERP support. And this was already pre-populated by us before the demo, but the way this would work for a user is they would come in, select that they want to create a new balance explanation, enter in the short description, which is ERP support, enter in a transaction date, as well as having a close date, which is typically optional. Moving on to the right-hand side here is where the user would typically enter in the amounts. But one of the great benefits of Oracle's account rec tool is, let's say the balance explanation needs to be amortized or accreted over a certain period of months, or even across a year. What we're able to do is technically assign that amount that's entered as a balance explanation and determine that we want to either use a straight line method, a custom method, or really there's several different options that you can go with, but also determine the number of months that need to have that amortization occur across. And if I expand this schedule here and I scroll down, you'll see for the months that are actually defined within the application, the system will use the method that you recommended, take the number of periods, and then give you the amortization value for each month, as well as the beginning amount and the ending amount associated with each period. From here, I'm actually going to close out of this rec. And the next rec that I want to discuss is the other method that Sam mentioned, which was the balance comparison. And for that one, I'm going to navigate to fixed assets. There we go, fixed assets. Fixed assets is a reconciliation that can be typically compared back to a fixed assets subledger, which is what's occurring here in this reconciliation. You can see a source system balance is loaded to the app, as well as a subsystem balance. The end goal of this is to make sure that the two balances align, and in cases where the balances do not align is where your difference field would be populated, in addition to then having users go into the system itself and make what's called a reconciling item to then adjust either balance, the source or the subsystem, and have that balance be explained and making sure that the adjusted balances between both systems align. A lot of the other functionality is very much the same. You'll have the ability to post attachments, post comments, and then also that workflow as well as the full history that's associated. And then this one thankfully doesn't have a warning as well, but if it did, the warning would appear in this side panel here. From here, I'm actually going to close out of this. Those were two types that Sam mentioned, but there is a third type. So let's say you want to just track a reconciliation within the tool. You still want to do the reconciliation outside of the tool because let's say you acquired a company. There is the flexibility within Oracle's account rec tool to then come in and specify really what's called a tracking only account rec. So for that one, I'm actually going to access this fixed assets acquisition. The tracking only differs in the sense that you don't necessarily come in to complete the rec within the system. The rec's actually going to stay outside the system, and then what's going to be done is the balances will be loaded in to make sure that the source and subsystems align. And it's really going to be the attachments that are going to explain and demonstrate the rec process. This is great for any company that is really acquiring other businesses and want to integrate them into the tool ASAP, but not necessarily having the ability to take the data that's in their source system, extract it, and load it in. So what Oracle's account rec tool does is provides the flexibility to determine how you want to set up each rec by each account, and even really for every company or every legal entity that you own. From here, I'm going to actually navigate back to the home page. Another key section that users will work with is going to be the dashboards. And the dashboards are fantastic within this tool. There is a lot of information that can be obtained. There are actually three different types: the overview, the compliance, and then the match metrics. We're going to start with the overview. The overview is going to give you the ability to select by period what you want to see and the information that you want to extract. So for here, we're going to stick with period 1 in FY20. You'll have the ability to change the way that you see these charts. So I'm actually going to choose by risk rating. So you'll see that you have your recs that are medium on the risk rating scale, high and low. This is also going to show you how many have been completed, how many are incomplete. And the best part is you don't have to track down each of these recs and actually look for who knows what rec is completed, who knows what rec is incomplete. You have the ability to click on this field here to then bring up a screen that populates with the recs that have been completed and submitted. And from here, even though this does give the account number, you still have the flexibility to then one step further, bring up that specific rec and then view it, make sure everything does look good. And then if there are any issues, to then send an email notification or post a comment to then let the user know to correct that issue. The same thing can be done for the incomplete. If I select my incomplete rec, it'll bring up that listing of recs that are incomplete. In this case, it's thankfully just one, and I can click that rec and it'll take me to the exact one. And this user hasn't done a very good job. They're actually 187 days late. So hopefully they decide that this rec needs to get done sometime soon. The good part is that in this case, you can post a comment and there are email notifications that are fairly easily set up that can get sent to both the reviewer and the preparer depending on who it's opened with. In this case, it would be the preparer who hasn't done the rec at this point. From here, I'm just going to switch it to a different view, and I'm going to go to account type, and you'll be able to view the same listing by account type. So we have equity accounts payable, accounts receivable, and the same flexibility to just choose your complete recs or incomplete recs to then bring up that listing. This was the same one that was incomplete on the medium risk rating. It's going to pull up that same exact rec. But let's say I closed out of this, went to accounts receivable, everything's completed, and you'll see the 2 recs listed, and it'll bring up that rec once you select it. So from here, I'll close out of these tabs. The next one that we were going to go over is the compliance one, which is one of the screenshots that were shown in the PowerPoint. So the compliance side has even more information available to the users. Similar to the overview dashboard, you do have the flexibility to go by period to select the periods that you want to view. You'll have these charts here that are going to show you your completed recs, your rejected reconciliations, the percentage of recs that are being completed on time, reviewed recs, the recs that have been reviewed on time, as well as any warnings that might appear in the recs. In addition to that, you'll see a breakout by user to show how each user within the system is performing. So if you know that there's an individual that might not be doing their recs on time, you can reach out to them fairly easily. Instead of really going and emailing them, you'll have the ability here to say, I can tell exactly which recs are on time and which recs are late. So if I navigate up here to the pie charts and actually take a look at each of these, similar to the overview, you have the ability to select each of these. So if I do completed recs, it'll populate with the list of recs that have been completed within the system. This is 9 out of the 13 that are available. And similar to the overview dashboard, I can go into each rec and actually take a look at what is being done within the reconciliation. From here, let's say I want to focus on the ones that have been rejected. So I'll pull up my rejected recs and I'll open one up. And then you can see that there are the notes here that the users have submitted to then say potentially why the rec has been rejected or what still needs to occur. And in this case, there is an action plan that is associated with this. So what I mean by action plan and essentially the questions that need to be answered at the end of the day, the customization is available to incorporate certification questions. To pass audits, you have to certify that the rec has been done a certain way and you've checked that the work is correct and you've ensured that all evidence is there to support what is being completed. These questions can be incorporated within each rec within account reconciliations, which makes life a lot easier. You go into the system, you answer these questions and it's done, and auditors can view that these have been answered as well. I'm not going to click through each one of these, but the next one that I do want to go into are the match metrics. So this one's going to be primarily related to the transaction matching module, which is within accounts and reconciliations. And I'm actually going to switch this match type from withholdings to intercompany. So you can see here for the match metrics, these intercompany receivables transaction matching rec had 132 transactions. Out of the 132, 104 were confirmed in the match process, 26 were suggested matches, and then 2 were unable to be matched. Now you might be asking, well, how quick can it match 132 transactions? The answer is it can actually match that very quick, probably quicker than you would be able to see the numbers within Excel. And to show that, I'm actually going to navigate to the navigator in the top left and then go down to jobs. Selecting the transaction matching. From here, I was able to run the auto matches prior to the demo. And for the intercompany one that had 130 matches, that auto match job matched those 104, I believe, transactions in a matter of 2 seconds. So that is lightning quick, and that performance stays pretty consistent even as you get to 1,000 recs, 2,000 recs, 3,000 recs. The system has the ability to go through, analyze the reconciliations and the transactions at a quick rate based on custom rules that are set up to your business needs. From here, one of the other items that I want to show is really how you're going to complete these matches. So if I navigate up to the matching and then go to the intercompany receivables, this is just another way that the user is going to interact and actually come in and see the suggested matches as well as any confirmed matches and anything that's really outstanding that needs to be done from a transaction standpoint. You'll have your dashboard that's comparing the accounts payable and accounts receivable. You'll have your subledger balances for each. You can notice that the AP subledger is off by about 50,000. You'll have your transactions as well as the adjusted balances and the difference down at the bottom. If I navigate over to the next panel, which is the suggested matches, these were the 13 that the system, based on the rules that were set up, didn't necessarily confirm the matches for you immediately. This is the flexibility that AR offers to then say, look, we can confirm anything that's a 100% match based on certain criteria, but there's also backup rules that can be created to then say, these are going to be suggested matches, and we need a person to actually come in and say, yes, this is a true transaction that needs to match, or no, this is not a transaction that needs to match. And that can be easily done by confirming or discarding the transaction. The next item is going to be the unmatched transactions. And these are going to be transactions that the rules couldn't essentially line up. In this case, we have 2 transactions on the accounts receivable side, but nothing on the accounts payable side. If there were transactions that the user did want to come in here and match manually, it would be as simple as clicking on the transactions on each side and then selecting match in the top right-hand corner. And then finally, we have the full listing of matches, both confirmed and suggested, on the 4th tab. This is going to show you everything that the system went through and was able to match, and you can bring up each individual one and see the specific matches that have occurred. From here, I'm actually going to go back to the home page. The last thing that I wanted to highlight were the reports that Sam mentioned. If I navigate to the reports card, there's going to be reports that are based on the reconciliation compliance as well as the transaction matching. I'm not going to run any of these reports at this time, but there is a wide variety and wide selection of reports that come standard with Oracle's Account Rec tool. And you can view balances by account type, balance by organizational unit. You can view any profiles that are invalid, any recs that have been late, missing, and these can all be provided to different business users as needed. So with that being said, we're actually going to wrap up the demo here, and then we're going to jump into the next set of slides.
Michael, thank you for that demo. To wrap that up, as we have a few questions that are coming in, but why don't you just talk about real quick how we've helped clients and our implementation approach, and then ultimately how we can help some of the people on the call, and then we'll turn it over to questions.
Yep, sure thing, Harris. So the ways we've helped clients, we've highlighted a couple of key aspects here, and all the items here on the list are related to the benefits that Sam and I have spoken about regarding Oracle's account reconciliation tool. First, we have the ability to, or we have centralized multiple existing tracking tools into one. What this has done is it's really allowed companies to cut back on software costs. If you have multiple systems out there where you're really just tracking your reconciliations, there's no need when you can bring everything together into Oracle's account reconciliation tool. In addition, we were able to centralize all the information, including the workflow, the list of recs that are available within the work list, as well as enable email notifications that can be sent out to those users from that one tool. From the second item on here is the ability that we've loaded balances directly from 7 source systems. Yep, 7 source systems is a bit much. Not every company is going to have so many sources going into one system, but this really identifies the ability to automate a process where if you need data from multiple locations, that can easily be centralized and located within ARCs to then complete your reconciliation process. The third is minimize manual matching for accounts with 3,000 plus transactions. We showed a quick highlight of how quickly Oracle's account rec tool can transaction match and complete 100 transactions. It's 2 seconds. 3,000 transactions doesn't take that much longer, and it's really a very efficient process, especially with the ability to customize the way the transactions are matched. The fourth one on here is the reduced number of reconciliations through groupings. A great thing that happens as you move to Oracle's account reconciliation tool is the ability to determine efficiencies in process, to then group account recs together to make sure users are efficiently moving through their process and completing recs at the appropriate level of detail. And the final item on here is the ability to enable controllership to enforce standardization. Standardizing the process really enables a more efficient process at the end of the day. And that takes away times from completing the recs themselves and then making sure that users are able to utilize the workflow capabilities as well as utilize the other functionality within the tool and do things the way that the business needs them done and not have a separate method for each rec. From here, some of the things that we want to consider when we implement the AR tool is going into really the approach that we found works best for the tool. And that approach is typically a 3-phase implementation. The first phase being tracking only, the second phase being reconciliation compliance, and the third phase being transaction matching. The first phase of tracking only is really useful for a business that doesn't have a system in place today, or is completing recs in multiple locations and is looking to bring the recs to a centralized spot. So the benefits for tracking only are really enabling the workflow, creating a work list that identifies tasks for users, enabling email notifications to let users know when recs are late, when they're going to be due in 7 days, or if they're actually due today. You'll have basic reporting capabilities that allow you additional visibility into the rec process, as well as having a system that is auditable from an audit standpoint and making sure that the reports can be generated and then produced in a timely manner. Phase 2 is the reconciliation compliance, where users will really be interacting with the application further. And this is where they're going to be completing the recs within the system and leveraging the functionality that was built during the previous phase, or if this is the first phase, it's really going to be where we understand the business and move that process over to Oracle's account rec tool. This is where users are going to add the reconciling items to complete their recs, as well as being able to do any aging out of the system, amortization, as well as accreting of any of those reconciling items. And this can all be automated within the system. In addition, probably one of the most important benefits of phase 2 is the fact that data loads can be brought in from the source, or multiple sources for that matter, and can be found within one system to then allow users more time to complete those recs and have it be a more efficient process. And finally, you'll have additional reporting capabilities that come out of this phase that gives you even more flexibility and visibility into the account rec process. The final phase is the transaction matching, which can actually be layered on to the existing reconciliations that are in place. So Oracle's account reconciliation tool allows for customized matching rules to be created in order to complete what's called the auto matches. And what the system can also do is you'll have those confirmed matches that I showed within the demo, but you'll also have the ability to view suggested matches that require a person to go in and say that the recs actually align with the transactions actually align with each other, and it's what needs to match in the system, as well as any manual matching, which is as easy as clicking on both sides and posting any adjustments that are needed. Finally, you'll have the additional reports that are available that comes standard with the transaction matching module that's enabled within Oracle's account rec tool. So really, what's next? We've gone over the implementation approach, and the goal now is really to help you. Our approach is fairly simple, and it's really we conduct a deep dive assessment on the current account rec tool, and if the current tool is Excel, we'll conduct that assessment on Excel, and then we'll see what the process is today and what the integrations are. It takes typically 30 minutes, maybe 45 at most, to meet with someone that's in a director or a manager in the accounting department. And it's really going to be an interview style meeting where we identify areas where we can improve the process and then make any desired changes as we move to Oracle's account reconciliation tool. With that being said, this assessment is free of service, and it's going to be very beneficial to just understand where you can see improvements in the process and how Oracle's account rec tool can help. Once we conduct that deep dive assessment, we're able to really recommend the best path forward. And whether this is with Oracle's account rec tool, starting with a tracking only phase, or moving directly within that reconciliation compliance and seeing where we can move forward with enhancements past those phases. We're going to be able to provide a level of effort and estimates for the recommended options, as well as provide assistance in understanding licensing options and considerations presented from Oracle representatives. Lastly, before we begin taking any questions, we do offer additional resources, and there are several blogs that we have written, and these blogs are really a good reference point for both the functional and technical standpoint of account recs. So these can serve at multi-purposes. The first one on there is our 3-phase implementation approach, which we briefly covered, and then the others are really a quick start guide on account recs, and then a couple more technical ones that we've written to help users guide their path through implementing account recs.
Thank you, Sam and Michael, for delivering that content. As you guys were talking, we had a number of questions come in, which I'll turn over to you as I moderate them. But really, 4 categories of questions, guys. One on tool selection, a couple on best practices, couple questions on functionality that I've kind of paired together into one question for y'all, and then finally implementation. So this first one I'll take. It's on tool selection, and one of the attendees asked, it's a little small, why do organizations opt for a solution like Blackline versus account recs? What are the criteria? Historically, Blackline has been an industry leader in this area, and as they've gone from their on-prem solutions now to the cloud, a lot of the history that companies and clients have with them, they've chosen to stick with Blackline. You know, when you line up Blackline and Oracle account recs, there is 100% parity, and Oracle account recs can do everything that Blackline can do. With that being said, you know, I think it's more now an educational process. We have a number of clients that spend over $1 million a year to pay for Blackline's transaction matching. When we informed them that they had that in their Oracle EPM cloud stack and they could do the account recs for what they pay per month, they were blown away. So I think a lot of this goes to education, and a lot of it goes to adopting new platforms, which we see across tons of companies as they go to cloud and really realizing the value of the tools they have. Okay, second question, Sam, this is on best practices. I'll turn it over to you real quick, but you know, the question was, should my company be reconciling using account recs to go back to the ERP, or should they be reconciling to the closed consolidation system, and what is best practices there?
Awesome. Okay, so of course, the answer to a lot of these questions is going to be it depends, right? So it depends on what the client would like to see and what they would have a case for. I think we do more frequently see that companies choose to reconcile back to the ERP because it has that level of detail that's needed, right? So a lot of times when you're moving from your ERP to your consolidation system, you're generally summarizing those accounts, right? You're not going to look at your 200 cash accounts in your closed consolidation tool. You may, and that's perfectly fine as well. But we see a lot of people that want to go back to the ERP to be able to reconcile at each base balance sheet account. And that becomes especially true when you work with transaction matching. So oftentimes you're not loading your transactions to your closed consolidation tool, you are just loading that ending balance. So if you are going to want to do transaction matching, you will have to go back to the ERP to be able to get those transactions as they come into the system to be able to perform that auto matching. So there is also the ability to complete reconciliations between the two. So whether you choose to go back to your ERP or your closed consolidation tool for the reconciliations, You can also kind of perform a system reconciliation where you reconcile your ERP to your close consolidation tool to kind of do that test of completeness to make sure that you're not missing any balances no matter which system you choose to reconcile back to. So to kind of summarize all of that, I think either is fine. We have seen more clients go back to the ERP, but that doesn't mean it isn't also perfectly acceptable to go back to your consolidation tool as well.
Thanks, Sam. It sounds like from what you were saying that one of the big takeaways is go back to the ERP and then do that secondary check. And I think that that's especially common on organizations that I've seen that have 5 or 6 different ERPs, right? And they're using account recs to do the transaction matching, but then they need to make sure that it got into their consolidation system like HFM or SC&H. Thank you, Sam. All right, Michael, just a quick question on functionality. In the demo, I think I saw this and you called it out, but can you perform the recs in local currency or is it just in USD? And then what functionality does account recs have if you can convert on the fly and things of that nature to support reporting?
Yep, so you can complete the recs in local currency or USD. The system is very flexible and provides the ability to do the recs in both, as well as being able to perform those currency translations within the system itself. So you'll be able to enter in rates on a monthly basis that then take your local currency amount and convert it to whatever your reporting currency is going to be. Let's say it's USD, let's say it's the euros. You'll have that ability to enter in those translation rates and then convert over to that reporting currency.
Okay, great. And that's probably another good reason why it can all be done in one tool, get the recs done and compare it across those currencies. Okay, thank you, Michael. And then, one final question, which I'll take and you guys can chime in is, how long will an implementation take? And I love this question, right? So, this is where Michael and Sam were talking about the 3-phased approach, and right, whether it's tracking only, compliance, or transaction matching, where every organization wants to start is a little different, right? Whether they're full-blown Excel, whether they're migrating off another system, the level of implementation. We have done in a short of a week, set up people to do compliance reporting or tracking only, I'm sorry, right? And then as you move through, right, transaction matching is a lot more complex, but it really matters on how many accounts are you loading data for, how many transactions you're matching. And this is where I would advocate, and what Michael said is, let us spend 30, 60 minutes with you guys. Let us talk about your current rec process. Let us do a deeper dive and show you the parity between account recs and your current process today, that it can handle everything that you're doing and even then connect it to the other pieces of the close. Let us take that time, spend it with you. We'll be able to provide you a much more detailed answer, not only on how long it will take, but what your team and your people can do to own and operate the solution from day one, and where you may need consulting to bolster that and help accelerate implementation, but ultimately with the most important goal of you as an organization being able to own the tool, own the recs, and being accountable to the process. So with that, that's all the questions for today, and we're just about out of time. Thank you everybody on the call for joining us. Like I stated earlier, we will send out the webinar tomorrow. I hope that we were able to provide some insight on account recs, the power of the tool, and how it can be valuable to your organization. Thank you all very much for being with us today, and have a great rest of the day. Thank you.